Your insurance company seems totally fine until the moment you actually need them, and suddenly you're starring in a bureaucratic nightmare you never auditioned for. Today, we're talking about how to spot a bad insurer before they ghost you at the worst possible moment. Think of insurance like hiring a bodyguard. You don't find out if they're any good until someone actually throws a punch. The red flag isn't always the premium price. It's the paper trail, the reviews, and the fine print they hope you never read. The first warning sign is a suspiciously low quote that makes every competitor look greedy by comparison. If one carrier is charging 30% less than everyone else, they're either cutting corners on coverage or betting you'll never file a claim. And friend, they are not betting against themselves. Check their AM Best or Standard & Poor's financial rating before you sign anything, because a carrier rated below A- is essentially a company held together with duct tape and optimism. Financial instability means that when a hurricane wipes out half a zip code, they might not have the reserves to pay everyone, including you. A massive red flag is when the policy language reads like it was written by someone who wanted to cover as little as possible while technically covering something. Exclusions buried in subsections of subsections are not accidental, they are a legal strategy, and you are the target. If a company makes it harder to file a claim than to actually build back what you lost, that is the system working exactly as designed for them, not for you. Watch for insurers requiring excessive documentation, multiple forms of proof, and repeated follow-ups just to acknowledge your claim exists. J.D. Power releases annual customer satisfaction studies on insurance claim experiences, and the gap between the top and bottom performers is genuinely jaw-dropping. Companies that rank in the bottom quartile year after year are not having a rough patch. That is their culture. And culture does not change because you wrote them a strongly worded email. One of the most overlooked red flags is an insurer with no local presence, no assigned agent, and a customer service line that routes you through 4 countries before reaching a human. When you're standing in a flooded living room at 11 at night, your call is very important to us, is not the support you paid for. Read the reviews, but read them smartly. Look for patterns in 1-star reviews, not just the volume. If dozens of people independently describe the exact same delay tactic or denial reason, you are not reading complaints. You are reading a playbook. A history of regulatory actions, state insurance department fines or consent orders is a red flag that most people never think to check. But your state's Department of Insurance keeps a public record, and it is devastating reading for certain carriers. Think of it like checking someone's criminal record before hiring them to watch your house. The 11th hour lowball settlement offer is one of the oldest tricks in the claims handbook. They drag out your case until you're exhausted, then offer you 60 cents on the dollar, hoping you'll take it just to end the suffering. Disciplined policyholders who document everything, hire public adjusters when needed, and understand their policy limits are statistically far less likely to be lowballed successfully. Here's the practical playbook. Verify ratings, read the actual policy before you buy, call their claims line as a test before you're a customer, and check your state's complaint ratio database. Moderate your expectations, size your deductible to what you can actually absorb, and never assume verbal promises hold the same weight as written endorsements. The deeper truth about insurance is that it lives inside the same feast or famine cycle as every other financial product. Good times breed complacency, bad times breed regret, and the disciplined few who did their homework end up protected while everyone else negotiates. Discipline, documentation, and due diligence matter infinitely more than loyalty to a brand or the comfort of a low monthly bill. You can be totally at peace with whatever comes your way when you've done the rational preparation, chosen a financially stable carrier, read the exclusions, and kept records, like a person who fully expects to need them someday. That is not pessimism. That is just playing the game with your eyes open. And if you're navigating bigger financial decisions around property, construction, or finding the right lender to back your next move, we can help you get started in real estate investing, home contracting work, and connecting with lenders. Check out our links in the description below.